Good afternoon, ladies and gentlemen. Thank you for joining me. Be getting started in about 2 minutes, guys. In about 2 minutes, we'll be getting started. I'm going to be sharing with you how easy it is to repair your own credit, how simple and how easy it is to repair your own credit. So, guys, as you jump on, do me a favor, drop your city and your state, and let me know where you're tuning in from. Feel free to like and share. Be getting started in less than 1 minute, guys, in less than 1 minute. Thank you. Okay, ladies and gentlemen, welcome. My name is Eric McKinley, and I am an executive vice president platinum in a wonderful company by the name of My Econ. Good evening, ladies and gentlemen. Welcome, welcome, welcome. My name is Eric McKinley, and I'm an executive vice president platinum in a wonderful company by the name of My Econ. My Econ is a personal financial success company. Now, this company shows everyone how to minimize their cost when it comes to correcting things that they've done in their finances. This is a personal financial success company. And one of the great products that this company offers is the do-it-yourself credit repair, known as the My Credit System. So there's a lot of people that talk about how hard it is to repair your own credit, and you shouldn't do it because you can mess it up, or it can be costly if you mess it up. Well, I'm going to show you today just how simple it is to repair your own credit if you have the right tools, the right system, and the right guidance. Okay? So stick with me. This won't take long, but I promise you, you're going to get some value out of this information. So if you feel inclined to do so, like it and share it. Drop your city and your state to let me know where you're tuning in from. And if you have any questions after this presentation, feel free to get back with me or the person that shares this information with you. So like I said, my name is Eric McKinley, guys, and I'm going to go ahead and get started. And we're going to start with some facts about credit, some interesting facts. Everybody is interested in credit. 68 million people have bad credit. A lot of people don't know that. 40 million more have an error on their credit report. In 2018, guys, credit repair was a $3 billion. That's $3 billion with the B dollar industry. That means that credit repair agencies and third-party credit repair companies made money off the backs of people's ignorance and fear. Now, here's something that a lot of people don't know, and that's 79% of the people who actually dispute the errors, they were successful in removing them. And the bottom line is everybody wants good credit, whether it's because they want to purchase a home, purchase a vehicle, or you know what, it's close to high school graduation. There's going to be some kids going to college, and the parents may need to actually apply for some loans. So you need some good credit. So let's check out what a good credit score actually is. The best credit score is 800 to 850. Excellent score is 750 to 799. You have good credit at 700 to 749. And now, this is where we start having questions, guys, because a lot of people think that they have good credit or their credit is in a good position, but they have fair credit, and that is 650 to 699. Now, as you start to climb down to the poor credit, like I said, 68 million people have poor credit, then that's 600 to 649. That's when you start experiencing things like subpar lending, rent-a-center, rent-to-own, buy here, pay here. Those are somewhat known as predatory type places. They're businesses, but they're going to prey on people who don't have good credit and can't afford to actually buy things. And then you have your bad credit with 300 to 599. Now, this is our start, guys. Your credit score at the highest is 850. At the lowest is 300. So that means in between you have 550 points that are available out there to build your credit score. So this is what differentiates us from the third-party credit repair agencies. We are a do-it-yourself type company. We love helping people to save money. We address all 5 factors. Most people don't even know that they have 5 factors of their credit score, but we have 5. You have payment history, amount of debt, which is credit utilization. You have length of credit history, new credit, and credit mix. So the payment history is worth 35% of your score, and it's a total of 192.5 max points. Now, just want to tell you really quickly, you can dispute as much as you want, but you cannot control 100% of your payment history. Then you have your credit utilization. That is 165 max points. Here is where you can control 100% of how much debt you owe. This is worth 30% of your credit score. Next, we have our credit history. Credit history is 82.5 max points. Now, a lot of people have an issue with credit history because a lot of people don't have it and it's hard to get it. We have a strategy that's going to help you get that credit history. 15% of your credit score depends upon this. Next, we have the new credit. That's 55 points, that's 10%, and your credit mix is also 10%, which is 55 points. Now, even if you had, guys, even if you had 192.5 points in your payment history, could be, and I bring that up because this is where the third-party credit repair agencies and the credit repair specialists are going to hang out. Even if you had that, you would only have 492.5 points. My question to you is, what about the other 65% of your credit score? That leaves a question and it leaves a big gap. Right now, I'm going to show you how to fill that gap in, okay? So here is the solution for the payment history, the same solution that the third-party credit repair agencies have and the credit repair specialists have. 4 letters, guys. You're paying to send in 4 letters. That means that when you actually get your credit assessment is what they called it, for however many dollars, maybe a couple of $100s, then they're gonna look at your credit score, they're gonna pull your credit report, they're gonna do all those things, and then what happens is you're gonna sign an agreement with them and they're gonna start sending off letters on your behalf. The first letter they're gonna send off is the debt validation letter. Now, that letter is asking the credit bureaus to verify or validate that that's your debt. We're not saying that it is, and we're not saying that it's not. But according to the Fair Credit Reporting Acts, you have the authority, the ability to have them verified if that's your debt or not. Once you send this letter in and they respond and say, hey, yes, it is your debt, then the next letter is sent off and it asks them to verify. What did you do to verify? What method did you use to verify that this is my debt? Did you have a signature on file? Do you have a contract on file? How are you verifying this debt? Remember, guys, your debt most likely, especially with a collection agency, was sold to a collection agency. And oftentimes it's not sold with a contract. So we're not saying that it's not your debt. You're not saying that it's not your debt. You're just going by the law, okay? Now, if they cannot verify that it's your debt or don't send anything back, we don't stop there. The next letter is the violation, excuse me, the violation of the Fair Credit Reporting Act rights letter, letting them know that they have not verified it, and by law, they must remove it from your credit report. Now, if they don't do that, you have an option. If it is your debt, I would not send this 4th letter off, the intent to litigate. But if you know it's not your debt, there's some things that we can do to point you in the right direction, and you have the right to go to court if you know that's not your debt. If it's your debt, guys, don't try to take them to court. Let's just move on to the next thing that we want to actually dispute, the next item on our credit report that we want to dispute. So now there's a few other letters that can be used depending on your situation, like the goodwill letter or the pay for delete, okay? Depending on your situation, we have those letters available as well. Now that's your payment history, and that's all that they're going to do for you. So you find yourself paying $200 to get started and then $50 to $100 a month for something that you could have done yourself, especially right now during this pandemic when a lot of people are at home. They have more time to take care of their own finances. Now, the next one is credit utilization. Credit utilization is your revolving debt. Here's a solution, really simple. Get out of debt, right? Eliminate that debt. The next one is to increase a credit limit. You can ask to have your credit limit increased. The next solution is to apply for new credit. Now, there's another solution that I'm going to talk about real briefly. And this solution is something that you may or may not have heard of. It's called income shifting. Imagine this. Imagine trying to get out of debt with the same amount of money or the same amount of income that you got into debt with. I'm going to say that again. You can't, in a different way though, you cannot get out of debt with the same amount of money that got you into debt. That means that you have to increase your cash flowing in. And in order to increase your cash flow, three things have to go down: your taxes, your expenses, and your debt. We have a strategy known as income shifting that's going to show you how to do that. The first thing we'll do is we'll recommend that you take a look at your W-4. 80% of Americans have their W-4s filled out incorrectly, overpaying taxes and waiting to the end of the year to get a tax refund. That's your money. Why not use your own money to get out of debt and build wealth? Now, solutions 1 pays down your revolving debt. Solutions 2 and 3 lowers your credit utilization by increasing your credit limit. What does that mean? If you ask for a credit limit increase, understand this. If you have a $5,000 credit card limit and you're maxed out, that means you got 100% utilization. But if you ask for a credit increase and they actually give it to you, and let's say you ask for a $10,000 credit increase, taking you to $15,000, that utilization just went from 100% to 33%. You have to be careful. Depending on what your credit looks like, you have to be careful because you don't want to get those hard hits. But then you're talking about new credit, the same thing. If you get more credit, of course, your utilization goes down. Now, minimizing your expenses, and I don't want to jump around, but minimizing your expenses is something that's very important, because if you have things that you're doing right now that are not that serious, you can actually buckle down and get the money to actually get out of debt faster. The third thing, credit history. Remember, we said credit history was 15%. And it's hard sometimes getting credit history, but if you use this strategy, it won't be hard at all. The solution is an authorized user. The thing that you want to do is you want to find a relative or a friend with a good credit card history. You want to make sure that they have a low balance and they have a good history of paying it on time. Then you ask them to be added as an authorized user. You let them know, hey, look, I'm trying to get my credit fixed. I want to do the right thing. I just need a little help. And most times, if they understand it, they will add you to their credit card. Now, they don't have to give you the card. As a matter of fact, I recommend that they don't give you the card. Basically, what happens is you're going to inherit their payment history. That's going to take you a long way as far as you repairing your credit while you're repairing your credit. The next thing is the new credit. New credit, the solution is really simple. Adding trade lines. Now, I know you guys heard of trade lines. I know a lot of people are out there buying trade lines. Listen, it's going to sound like I'm hating on business owners. Listen, I'm not. I'm here to show you how to repair your credit at a discount rate. You don't have to purchase trade lines. If you have the amount of money to purchase trade lines, you have the amount of money to pay some of your debt down. So here's some solutions. Department store cards, secured credit cards, rental history, credit builder loans, okay? So let's talk about the department store cards. They may be able to help you out, but they may not help out a lot, but they may be the easiest ones to get, but you want to be responsible. A secure credit card basically says that you're going to shop around, maybe go online, shop around, or go to your local financial institution and ask them, do they offer a secure credit card? Find out what the interest rates are. You want to be careful about that, okay? You're going to basically deposit some money into an account and you're going to use their services. Then you have your rental history. If you're renting or you know someone who's renting, they can actually use their rental history to go on their credit report. Okay, there's a system that we have in place that you actually report your rent to your credit bureaus, and it can actually count as your history. Okay, then we have the credit builder loan. Here's the credit builder loan, guys. Go into a bank, financial institution, say, hey, you know what? I want to apply for a credit builder loan. They're going to check your credit. If everything works out, they're going to take some money, move it from one account to a certificate of deposit, a CD. Maybe it's $1,000, guys. You borrow that $1,000 on a credit builder loan and you pay it back on a monthly basis. Don't be in a hurry to pay it off, because what's happening is the credit builder loan is going to help you to build your credit. And when you're done, you're going to have access to that $1,000, and that's going to help you to create your emergency fund. So it all works out. Then last but not least, your credit mixture. The solution is applying for credit. Now, you may not need a credit mixture, but you're talking about having revolving debt, which is credit card debt, and then also having installment debt, which is a vehicle or a mortgage. You may not need a credit mixture. If you don't, I wouldn't mess with it. But once you completed the first 4 credit scoring factors, you're gonna already automatically have a credit mixture. The ideal is to have 3 active revolving to 1 installment. Now, here comes the fun part, guys. We offer a unique selling proposition, 26 step-by-step do-it-yourself videos. We're going to show you how to repair your own credit in front of your phone, your tablet, or your laptop. You don't have to go back and forth. You don't have to deal with other people, and you don't have to worry about being embarrassed about someone else seeing your credit scores. The other thing is you won't have to share your social security number with a third party. The next thing is we offer the 4 rounds of dispute letters. Also, the income shifting strategy that's going to show you how to lower your taxes, lower your debt, and lower your expenses. That's going to put more money in your pocket that you can shift towards your debt. The debt elimination software. You need to organize your debt. You want to know how much you owe and how you're going to actually attack it. Minimize expense calculator, reestablish credit sources, investment calculator, and also, guys, this is a business opportunity. Why is it a business opportunity? Because we know people want great credit. I told you before, 68 million people had poor credit in 2018 alone. What do you think it is now? So here's the deal, guys. My credit system has an affiliate position. All you have to do is invest $29.95 in yourself one time, and then 30 days later, only $34 per month. What is this going to do for you? This is going to give you access to a business system. While you repair your own credit, you are able to write it off. You're also going to be able to offer it to someone else, okay? No quotas, no upsells, no hassles, no experience. You're going to get a digital and automated system that's going to provide you your own private portal, okay? And when you refer this information to other customers, you're going to earn some great income. So here's the deal. Every time someone purchases one of your memberships, you're going to earn an upfront residual of, you're going to earn an upfront commission of $25 on every personal membership sale. That is, and if you start at $29.95, that's 84%. You're going to get up to $7 on each team membership sales, and you're going to get up to $8 monthly residual when you build your business. This is building a leveraged business while you're repairing your own credit. Because if you can repair your own credit, that means the people in your circle can do the same thing. So here's the compensation plan. Just imagine bringing in only 6 affiliates every week. That's $150 per week in your pocket. If you do that every week, that's $300 a year. That's $2,100 residual income, all because you decide to fix your credit yourself. 20 a week is going to yield you $500 a week. That's 1,000 affiliates a year, and then that's $8,000 a month residual. Could you use $8,000 a month? Well, let's take it up another notch. $40,000 a month, $100,000 a month residual. That's over $1 million a year. Guys, even if you decide not to, even if someone decides not to buy or purchase a membership, they can still purchase the credit repair for only $119.95. That's one time, and they have it. Then you're going to earn up to $50 every time someone purchases one, and every time your team sells one, you're going to earn up to $17.50. So you're going to get upfront weekly income and compounding residual income. These smart cash flow strategies, they just make sense, guys. So this is an opportunity to become an affiliate of a fast moving economy today. So guys, thank you, and I appreciate your time. Guys, think about this. For only $29.95, you can start repairing your own credit. That's just a fraction of the cost of having someone else to do it. Plus, you're not learning anything. You're going to learn how to do it. The other thing is you have an opportunity to become a business owner. Who does not need extra money during these times? If the pandemic hasn't shown us anything, it's shown us that one stream of income is just not going to get it. So guys, what I want you to do is get back with the person that invited you to this training and get started today. My name is Eric McKinley, guys, and like I always say, when you know better, that's when you can do better. And the only knowledge that's powerful is properly applied knowledge. You guys take care, and I'll see you guys at the top, because there's too many people struggling at the bottom. Peace.